What in the world is going on with SoFi stock? It opened up at $6.52 and it closed at $5.47. So down over 12% today, which on first glance, earnings were pretty positive. So what happened? What's interesting is this stock is actually up 21.56% year to date. So that's something you do have to keep in mind. The 52-week low was $4.24. 52-week high was $8.52. And later we're going to do a couple things. I'm going to show you a clip from CEO Anthony Noto, and I'm going to look at a chart and tell you where I think the stock could go. Right now, it's about a $5.1 billion market cap. So this was the headline this morning. The stock was up. Everybody was excited. Beat on top and bottom lines and even raised guidance. Q1 GAAP EPS, negative 5 cents, but that did beat by 3 cents. So this isn't profitable yet, but they're tracking to be profitable by the end of this year. Revenue, $460 million. That's up 43% year over year, beat by 23.22 million. Now the market wants to label this as a bank because they did of course buy a brick and mortar bank, but how many banks do you know have 43% year over year growth? Of course this isn't profitable and it's leverage. We'll talk about some of the risks later and why the stock is selling off. Let's look at some more positives here. The lending segment generated revenue $325 million, up 33%. Adjusted EBITDA stood at $76 million at a 16% margin, exceeding the upper end. Net losses came in at $34 million. Net income margin was 54%. 433,000 new members were added. That's an increase to 5.7 million total members. Originations grew by 7% year over year to 3.6 billion. Of course, SoFi has been dealing with lots of issues. When you think of student loans, that's one of their focus areas, and they've been navigating the storm pretty well. Personal loans have been higher. We're going to talk later about mortgages and how that could be an opportunity for them as well. Deposits, this is big because when you think of a lot of the outflows, people are taking their monies out of banks because they're scared with all these bank collapses. Deposits increased by $2.7 billion on a sequential basis, now to exceed $10 billion. And this is big too. Cash and cash equivalents increased by $1.1 billion to $2.5 billion in the last quarter. So even though they're not profitable, $2.5 billion is quite a bit of money for a market cap that's just over $5 billion. So this article tries to make sense of the drop, and I think it helps some, but I've got more information for you, so just stay tuned. This is essentially saying that their full year guidance was underwhelming, even though it was a raise. So if you look at this, now expects 2023 adjusted net revenue of $1.955 billion to $2.02 billion versus $1.97 billion consensus. Now that's up from the prior range of $1.925 to $2 billion, but it's a pretty small increase. So this article is trying to make sense of it, saying that the beat could have been higher. But I think there's more to the story, and I'll explain. This indicates at its worst, SoFi's annual revenue could still fall below the average analyst estimate. So this is from the earnings transcript. Once again, we are achieving several financial inflection points. Adjusted EBITDA of $76 million is now greater than stock-based compensation at $64 million. This has been an issue with SoFi as well as many other technology-related stocks, when you think of SBC. So this declined, and this is another critical step towards GAAP net income profitability they're hoping to achieve at the end of this year. We achieved positive variable profit in the financial services segment and remain on track for positive contribution profit by year end. And really the call overall was filled with lots of very positive information. So here's another article that's really a bear case, and the author is saying he doesn't believe that paying a 20x forward EBITDA for a leveraged bank is compelling. I remain perturbed by just how leveraged the fintech business has become, and that's certainly one of the issues here. So what else is going on? Here's the members. You can see it. They added 433,000 more members, up 46% year over year, 5.7 million members. You can cross-sell these members products. They keep adding more products, up 46% year over year. Here's one negative, Galileo. It says 15% year over year, but you can see this is a decrease here to 126 from 131, and this is in millions. So in a little bit, I'm going to share my thoughts on why the stock's down. We're also going to look at a chart, but first I want to show you this clip here from CEO Anthony Noto on CNBC. Check it out.
I want to point out, by the way, too, that you were buying your shares the week after the SVB collapse. Just talk to us about that a little bit.
I'm focused on the long term for our company. We think we're building the company that's going to be the winner that takes most in the digital financial world. We've built a very durable company that's a one-stop shop across all of your financial needs, and that's allowing us to gain huge market share. We grew over 40% in revenue to an eighth consecutive quarter of record revenue at $460 million and third consecutive quarter of record EBITDA. So the business is operating on all cylinders, and we're able to weather the storm that's out there because of our diversification and our unique approach. And so I'm focused on the long term. And when I see opportunities of uncertainty and investor concern, I want to make sure I express my confidence by putting my money where my mouth is.
Do you think that there's any sort of confusion in the marketplace about the guidance that you gave today or the commentary about, kind of the weakness that you're dealing with?
No, what I'd say is we're in a very uncertain economic environment. We've seen a disruption in the banking industry that's obvious given all the news that you've been covering today, as well as what's happened over the last month. That's been layered on top of the fact that we've had record high inflation for the first time in several decades, in addition to the fact that there's uncertainty in the economy and global risk in Eastern Europe. There's a lot of uncertainty in the marketplace. So in many cases, stocks take 2 or 3 steps forward and 1 step back. And our performance is what we're focused on. And I can't think of a company that's on track to do over $2 billion of revenue and the type of profit improvement we're driving with 40% top line growth and just the diversification we have across so many businesses.
Yeah.
The only way you can drive 8 consecutive quarters of record revenue is that you have different businesses that can perform in different environments, and you have a management team that can allocate resources to make that happen. And that's what we're doing, and that's what we can control.
Money is fungible. You can move it around. It's easier than ever. What's it been like business-wise the last several weeks?
Well, first and foremost, I want to emphasize for our viewers that we've added more than $2 billion of deposits in each quarter for the last 3 quarters. And we're well on our way to doing that again in this first quarter of the year. The disruption that happened in the marketplace gave us an opportunity to instill confidence, to build trust with our members, and to build trust with new members. The first thing we did was made sure that there was no direct impact on our business or our members' financial situation given that disruption. From there, we then said, how can we be more helpful? How do we increase the value proposition? And we made the decision within days to launch a new level of FDIC insurance of up to $2 million of FDIC insurance through a partnership with a third party. We are a national bank. We're also able to leverage our funding and our loan business to give a really attractive interest rate. We raised the interest rate to 4.2% on our savings account. We also have over a 1% interest rate on checking account. So we wanted to send a strong message that SoFi is a safe and reliable bank that you can put your money with. And not only that, we'll give you an unmatched value proposition in high interest, the ability to spend anywhere you want, when you want, and how you want from your mobile device.
So the CEO is very bullish long term, and he's saying exactly that. Long term, he's thinking about 5+ type years. So for investors that are thinking long term, this could still be a great investment, but we're not out of the woods yet with volatility. And there's a lot of macro conditions that are impacting a stock like SoFi. Another positive for SoFi longer term is mortgages. So when you think about the customer base of SoFi, the clientele, as they age, there's going to be more and more home loans. And as they build that trust, I think they can easily cross-sell to add more mortgages to their lending business. So recently here, they acquired Wyndham Capital Mortgage. The reason for this is they're trying to grow that mortgage segment. And mortgages are tough. It takes a long time to build that out. This is a very long-term play, but it's something to note here. The acquisition will enable SoFi to expand its suite of mortgage products available to members and enhance unit economics. So this deal is not expected really to see results for at least 6 months. So I'm thinking maybe 12 months from now, what does this business look like? There's certainly risk, but there's a lot of reasons to be positive and bullish about SoFi as well. So right now, SoFi is trading at about $5.46 after hours. I want to show you some valuation metrics. Before I do that, short interest as of April 14th, 11.4%. So price to sales ratio is 3.27. Price to book is 1.12. And PE right now, it doesn't have one, but next year's estimate is 173.1. So that is still pretty expensive. Now, this is a big headline from this morning, and I think it's part of the reason why SoFi stock sold off. JP Morgan Chase took over First Republic, FRC is the ticker. That stock is essentially worth zero. Now, the good news for the people that have money in the bank, it sounds like they're going to get their money for the most part, but if you own shares, essentially it's worth nothing. And the headline here, biggest US bank failure since 2008. Of course, this is the third bank now to massive fail in 2023. So some quick real talk here. I'm going to share my thoughts of what I think is going on with the stock. I'm also going to share a chart, tell you where I think the stock could go. If you're new here, please subscribe to the channel and click that bell for notifications. I'm trying to get the channel over 40,000 subscribers in 2023, and you can help me out by subscribing today. I also need to announce that this video is sponsored by The Motley Fool. If you'd like to see the 10 best stocks to buy now, visit fool.com/firedupwealth. A reminder, Motley Fool doesn't tell me what stocks to talk about, what videos to make. They're a great partner, and check those guys out. You can also join our private community, Patreon Discord, by visiting patreon.com/firedupwealth. So just off the top of my head, I've been talking about this a lot in Discord today. A couple of different things are working against SoFi. Number one, the FRC collapse. Number two, this was a SPAC. Anytime it's a SPAC, we always say it's a spec stock. And the market really wants to throw all SPACs in the trash, good or bad. So when I look at stocks like SoFi and Indy, I'm very bullish about those businesses longer term. And there were good reasons for SoFi and Indy to go the SPAC route versus IPO. But a lot of businesses that go to the SPAC route, they really go the SPAC route for the wrong reasons. And a lot of these SPACs are going to probably file for bankruptcy and go out of business. Now, that's always a possibility for a company like SoFi, but I don't believe that's the case, especially with $2.5 billion of cash on the balance sheet. But the fact that it was a SPAC is actually impacting the stock because of volatility. There's a massive amount of shares, and that's one of the reasons. Number two, the market really wants to consider this a bank. They, of course, do own a brick and mortar bank, but it's really a fintech play. Anytime you take a business segment, like if you have a SaaS company and you add something that's not SaaS with different margins, it confuses Wall Street, and really the market just doesn't know how to value it. And so I think that's part of the problem here too. I think the market's looking at this and saying, this is a bank. Just like Tesla is a car company, SoFi is a bank. But how many banks do you know, again, that are growing at 40-45% year over year? The reality is it's still not crazy cheap. Even though it might feel like it because it's come way off the highs, it's not profitable. And even based on next year's estimates, you're talking about 144 PE ratio. This is not the type of environment that's going to support that. Now, there's two schools of thought. If you're a short-term trader, this is something you probably stay away from. If you have a long-term horizon and you're investing appropriately, you're hedging, you're having lots of different stocks, and you buy this as spec, thinking 5+ years, you could make a lot of money. Of course, spec stocks, they're stocks that could give you a 10x return, or they could go to zero. But I think the risk reward on this stock at this price range is getting pretty attractive, and we're going to look at a chart next. And of course, this is just a quick video and earnings recap. There are other reasons why the stock could be down. I encourage you to drop some comments below and share your thoughts on it as well. But I think a big part of it is the market is targeting SPACs and they're selling them down. There's a lot of short sellers, especially when you think of banking, and the overall market's just going to look at it and say, this is a bank. This is one of those expensive banks that's not profitable. It was a SPAC. It was a meme stock. Let's throw it in the trash. Let's short it. I think a lot of it, really comes down to that. So we use technical analysis in Fired Up Wealth really to get better entry and exit points. We're long-term investors, and macro and fundamentals are going to be most important always. But looking at a chart here, you can see this thing ran from $4.24 all the way up to $8.24 in a really short period. So oftentimes you'll have a 50% retracement. It did that, and of course a lot more. It was trying to find a footing here, and you can see it just dropped off a cliff. This is a really nasty bearish candle right here today. So these are Fibonacci's. You can see it broke right through the S2. The next support line, this S3, it's around $5.30. It's possible it finds a footing there. I think there's probably going to be more pressure. The other thing you have to think about is the Fed's going to come out and tell us what they're going to raise rates by, probably 0.25%. We also have lots of earnings reports this week. And of course, Jerome Powell is going to give commentary, and that could make the entire market sell off. So this could see a lot more pressure. If it does see pressure, I think it's a possibility it holds this former S3 right around $5.05 or $5.10. And I think it's possible you could even see it down as low as $4.50. Down here is around $4.35, and this is really going to be a retracement. So if I pull this up here, you can see this is the bottom of that blue line right around $4.30. So we might not be out of the woods yet for SoFi. I like this stock when you can get it around $5 or less, around one price to book. I think it's attractive, but only for the right risk tolerance, for somebody that's going to hold this thing for 5 or more years as a spec investment. And And this stock could make you a lot of money. The fact that the CEO is so bullish on the company, it certainly gives me more confidence. There's a lot of stocks that are in this category. You don't see the CEOs coming on CNBC and telling you they're buying more shares and telling you they're positive about the outlook of the company. And it doesn't necessarily mean that the company has to succeed for that reason, but it certainly does not hurt when you think of sentiment and conviction from my standpoint. I hope this video was helpful, guys. Make sure you subscribe, click that bell for notifications, drop me a like, drop me a comment. Appreciate your time and attention. Have a great rest of your day. Take care.